Today is day number 35 of the $1,000 account challenge, and we are up by a hair, $113 or 4.47% of the total portfolio balance. Now, I say by a hair because we had a tornado of a trade blow up in our faces, and it took quite a bit to manage this trade back down. I'm going to walk everybody through that and let you know what happened. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. We have already made 100% of that $1,000 and we're working on 200% coming off of a slump from last week. Straight off of the day trade watch list, we had Microsoft as a long idea above $417. Now, today I did send out text or typed alerts, so we will review those alerts. We're going to go to the 1 minute time frame for the chart for Microsoft and talk about the setup. It was a stock that was gapping up, and I figured maybe this is too much extension. We actually get the drop in the pre-market and then the rally up, pretty heavy rally up straight to 417. Now, when I see this, all this green back to back to back to back with really no sort of pullback, I was thinking it might be worth it to utilize 417 as a point of resistance rather than something to take this long at, especially since we got an initial rejection right here. So that is why initially I did take Microsoft short here at 9:47 a.m. Stop loss was a break above 417, and I give you the contracts. Everything's timestamped here. I actually forgot to type my fill price on the first alert, but I corrected that within the same minute. So 947 fill price 0.56. So we go short here looking for the rejection of this point of resistance of the pre-market highs. And we get that. We get the move down, and we get the move down so fast that those contracts jumped right past 20% and up to 30%. So I went ahead and took some profits off at 30%. But I was thinking, you know what? This actually at this time is breaking this uptrend trend line. Maybe it continues down and gives us a run all the way down towards this low of day down here. So there was a lot more profit margin here that was available, right? Unfortunately, we did not get that. I would have been better off just taking off all of my profits at 30%. We get the recovery move right back up, and those contracts went back to flat really quick. I did not think that that was going to happen, but I did set my stop loss on the remainder at break even, and when it rallied right back up, I closed it out at break even. So very unfortunate there. Closed out my runner size at break even. But, you know, I wasn't fully convinced that this was a rally that was going to totally reverse at the time. So what I said was, we can go back in. I'm going to close this out at break even. I already took 30% off on the first entry. We're going to go back in on this though. So we get the rally up to the 417 mark. I get a better entry than what I had previously, right at 417, stop loss at 417, and this is at 9:51 a.m. So I said, looking for re-entry. A 951 stop loss will be high of day, and then I said I went ahead and took my re-entry. I'm using smaller size this time because I didn't want to continue to put on extra risk if this were to continue up. So I sized down to mitigate the risk. We get a reversal right away. We're green on the trade right away, and the drop down at 953. We are up 20%. So here's my fill price, 951. Literally 2 minutes later. That's all it took. Now up 20%. Give you the contracts. It was a short idea looking for the rejection of 417, entry 446, now at 55, right? And closed it out there. And good thing we did, because then we get the rally back up, and I'm like, okay, maybe we go in on this a third time, but this is actually still putting in these higher lows, and it's compressing to a single point of resistance. So I made the decision there. I said, you know, that's 2x, over 20% profit on the same stock within 10 minutes. I'm not going to go back in on this a third time, let it be, because I was thinking maybe it does break over. And my plan actually was to short this at the true high of day, taking it short somewhere up here or here. But I decided against it. We get the pullback. I wasn't trusting it long, and then that's maybe where I made the mistake, because we could have easily flipped this long on this dip or even this dip and caught that move up. I don't think we would have held this entire time, but we certainly would have gotten a move up close to the high of day, probably another 20% gain there. So it's unfortunate, right, that we didn't get that type of move. But what I was looking at was then Google, right? I see Google, and its pop move up towards 147.5. Now, again, straight off the day trade watch list, Google was a long idea right here at 147.5. So I see this rally up and I'm thinking this is worth watching, right? Maybe we can take it long, but I was a bit too late and I should have taken it short. So I missed, and it would have been in the same exact trade as Microsoft, where we're looking for a rejection at the point of resistance following a run up, right? So Microsoft happened, rejected, pulled back. We made money. Google happened, rejected, pulled back. We could have made money. And then I see AMD go. AMD starts taking off, right? Up to $172, 172 area. AMD was a long idea above 172. So I'm thinking maybe AMD does the same thing. I watched this happen on Microsoft. I watched this happen on Google. So when AMD rallies up to 172, I'm waiting for the rejection. I go short here. My stop loss originally was 172. But then we get this pop move. We get as soon as I enter, we get this stronger candle, higher volume move up, and I don't cut the trade. And this is where this tornado of a trade happens. We get a move higher. I average in there. We get a move even higher. I average in there, and then we get the reversal finally back down. When I closed this trade out, though, unfortunately, I was not back to break even by this time. You would think that by averaging in, my average would be somewhere over here and I would be back to break even over there. Didn't happen that way because I'm trading same day expiration contracts, right? And because I'm trading those same day expiration contracts, the longer that you're holding those contracts for, the more premium that you're burning over time. So by the time this did decide to reverse, I wasn't anywhere near break even. I think I was still down like 25-30% at this time. So really, really unfortunate trade here. But I want to tell you that what kept me in this trade was the fact that I was sized down. So even at the very top, after I did size in, so I sized down, averaged down, even after all of that, at the very top, I was still green on the day overall. I nearly gave up. If this didn't pull back as much as it did, and if it did continue to push, I probably would have given up all the profits on the day. And that would have been really terrible. But I don't think, I know that I would not have let myself go red on the day from this trade. But this is a really fine example of literally what not to do. Took the entry short here. I should have just cut it right away because it would have saved me the headache of averaging, which cost me more because I'm buying more contracts, which means I'm paying more in commission, which means I'm taking on more risk. You see, it's this tornado of a trade that you just get wrapped up in. And at the top, I was stuck. in the trade. What am I going to do? Realize a 60% loss or wait for a pullback. What I do know to be true is that on the 5-minute time frame, these candles were closing outside of the top VWAP band, and typically when that happens, the stock likes to pull back towards the middle VWAP band, and we know that there is an ebb and flow in the market, right? Stocks don't generally just run straight up forever unless there's some type of news catalyst. I didn't see any sort of specific news catalyst on AMD, so I figured it was likely going to pull back. It was just a matter of when. So a few things that kept me in the trade. Number 1, proper sizing. Number 2, averaging in. And number 3, the fact that I was already green on the day. And at the top of this trade, at the peak of my being down on this trade, I was still green on the day even after that. And then maybe we can add in that we knew that most likely AMD was going to pull back at some point. It was just a matter of when. So for anybody that followed me on this trade, I want to show you something in the alert room because I put this out. I said that I added here. You do not have to follow me, but I added, right? So always make sure that you are making your own decisions when it comes to your trades. I don't know how much capital anybody else was using. I don't know how much anybody else was green on the day, right? This trade for other people might have put them red on the day if they continued to add it, or if they cut it at the top, or if they didn't hold through. So whenever you enter into a trade, regardless of what anybody else is doing, always make sure that you are following a plan that is your plan that is catered to you. All right, that's all that I have for you today. Press that like button for me if you haven't done so already, and subscribe to the YouTube channel if you haven't done so already. It's just the best way to support me as a content creator, and I would greatly appreciate it. Thank you so much for your time. Take care, and I will see you next week when we continue the $1,000 account challenge.